Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Daria. We have with us Riya Singh, technical analyst, currencies, joining in. Riya, welcome to the show. First, let's start with the Indian rupee. What's your anticipation on that, taking into consideration that Friday we have the RBI policy?
Yes, I think this year's RBI policy is again we all are looking forward to, because if you look at the recent budget uh, uh, statements from the finance minister, the huge budget that the FM has released for the year. So if you look at the perspective of what RBI will do in order to complement the the budget, so that monetary policy could go in hand with the fiscal policy, is something that everyone will be looking forward to into the statements of this policy meet. I think if you look at the overall perspective as to what are the key factors that RBI will play out into the current fiscal, is how they'll handle the inflation and what will be the growth forecast for the year from the central bank. So obviously, if you now if you look at the bond yields, where the RBI was quite efficient enough to get it in line and had maintained a quite significant control on the bond yields, it recently showed up because there has been some unwinding into the liquidity support from the central bank side. Now, this has what resulted into the bond yield shoot up. Now, as again, with respect to the borrowing plan that the government has laid out. Secondly, if you look at the inflation part, now obviously the inflation numbers that was recently released had come around 4.9%. So it indicated there has been an ease into the inflation. So the major cloud that was onto the whether the RBI will go with the rate cut or not is something to be looked out for, because inflation was playing an upper hand on the repo rate. So I think short-term impact on the fiscal deficit is not something that the RBI would worried about, but it will rather work on how they'll do the accounting adjustment and focus on the better quality of capital spending. So I think in the coming in the coming policy meet, the growth forecast, as far as growth forecast is concerned, I think there can be an upgrade into the growth forecast given the expansionary budget that the finance minister has released. So there can be a revision into the on the positive revision on the growth forecast from the central bank, as well as I think there can be a hold onto the repo rate because inflation has come down and there is not much of the liquidity issue that is there into the market. I think the liquidity support will continue whatever that has been released and what the RBI is maintaining. Obviously, the OMO calendar is something that the market will look out for. But as far as the repo rate is concerned, I think it will be maintained at 4%, given in consideration with the expansionary budget that has come in, thus reducing the urgency for the monetary policy to come in hand. So I think a positive revision on the growth forecast and maintaining the RBI will maintain with the current repo rate at 4%.
Right. So with this now, you have the BOE monetary policy also, which is slated today. What's your anticipation and how could it affect the currency market?
I think Bank of England is also likely to keep the policy on hold because if you look at the, yes, there was quite a lockdown that was put in place due to the new COVID-19 issue. But I think with the recent numbers that have been published from the country itself, I think that the chance of Bank of England going into a negative rate cut is something that can be pushed assured. So there won't be much of uh, activity that can, or the news headline that can come forward from the Bank of England, and it will have a little impact, because if the policy does come in at the same rate, and the only the thing that will be look out for is how the central bank will keep its pace with respect to the asset purchases in the coming months. Because if you look at the numbers, it showed around 3.4 billion pounds a week, uh, the asset purchase that the central bank is doing, which means this is the kind of fiscal measure that the central bank is putting into the economy on a weekly basis. So the liquidity, how much liquidity and fiscal measure support will the central bank do for the UK economy is something that will everyone will be looking forward to. So I think negative rates in the coming months is something they're still talking about, but I think it will be at bay as far as I am concerned. So they'll maintain with the current policy rate, as well as only the pace of the asset purchase is something that one should look out for.
Right. Because if you see your euro as well, that has taken a turn from the bullish leg and it's witnessing a sharp dip in the last four trading sessions. What's the reason for the same?
I think if you look at the whole eurozone altogether, the region has been into a double dip recession recently, and the numbers that have posted for the fourth quarter is supporting the same. And plus, the strict lockdown that was put forth across the regions has definitely weighed into the whole economic activity at the start of the current year. So obviously, this has to come into play into the strength of the euro as well. Secondly, if you have seen the statements from the past ECB, that it has, stated it was very keeping a keen eye onto the strength of the euro, because it was hurting the export, the export rates of the country. So they might have a hand into this as well. Secondly, if you look at the inflation numbers, the inflation numbers have returned to the eurozone, and this is another reason I think that could play into the weakness of into the euro. Obviously, it is a welcome part from the ECB, because they were quite struggling with the inflation. Now, the inflation only increases when there is a demand into the market. So, obviously, a recovering demand is something that is seen into the with respect to the inflation, but obviously with the relationship with the currency, obviously it has its part in keeping the euro down. So I think going forward there can be a little bit of weakness that we can see into the eurozone, and as well as into the euro.
Right. So, Riya, what strategies would you recommend?
I think you can definitely sell into the euro in the coming days. Look for selling at a higher highs. It has already dipped quite much today in the today's trading session. So look for shorting at a higher highs of around 87, 86, or 88 levels. Short on highs around 88, 87, 86 levels. Keep a strict SL of 88.20, and you can keep a target of 88.50 into the euro. The second strategy that you can look forward to is actually going long into the JPY INR above 69.60 for a target of 69.78. Keep a strict SL of 69.40 into the JPY INR. As far as Indian rupee goes, I think Indian rupee is struggling with the 73 support right now, and if it respects the same and opens on a positive note, it can again test the highs of 73.25, 73.50 into the coming days.
Right. Thank you, Riya, so much for sharing the strategies and your views. Thank you, viewers, as well.